This is your teacher Haris Bhatt, and today we are going to solve the question of non-profit making organization. And this question has come in A-level accounting P3 9706 in the year May June 2231. So the question has come in May June 2231. One of the not a very difficult question, but a technical question again, which we are going to solve today. So let's see. MC Sports Club provides sport facilities, operates a cafe for its members, and hires out its meeting room. So it means that we have a cafe also, and we also hire out a meeting room. The treasurer of the club provided some of the financial details for the year ended 31st December 2021 as follows. Balance at 1st January 2021, equipment has been given net book value, inventory of cafe, that is opening inventory. 1st January है ना, that's why. Amount owed to cafe suppliers, opening trade payables, deposit paid to a hotel for annual dinner. This is an income basically 4,000. Receipts for the hire of a club's meeting room in May 2021. This is also treated as a income, or the income which is going to be converted into annual subscription of each member is 200. So annual subscription of each member is 200. New members admitted in the first half of the year have to pay the annual subscription in full. This has also been asked by the examiner in the last question also, that first half you have to pay complete $200, but new members who are admitted in the second half, they are supposed to pay 50% of the annual subscription, means they will pay 100. Details of the number of members for the year ended 31st December were as follows. So members of 1st January, they are 2021, which were the members which were already our members, are 420. So let's calculate the annual subscription. 420 multiplied by 200. How much it will come? 84,000 is the subscription income for the members who are already members from the previous years. New members admitted before 1st July, they are supposed to pay the full fee for members for subscription. 18 into 200, that is 3,600. And those members who have admitted after, they are supposed to pay the 50% of the subscription, that is going to be 2,400. So if you will add all of them, means 84,000, 420 into 200, 18 into 200, I think that will become 36,000. Or I'm right? No, right. 3,600 is the right answer. And then 24 members are admitted after 1st July, so they will pay 24 into 100, that is 2,400. So the total of all three of them, yes, is going to be our annual subscription. Yes. How much? 84,000 plus 3,600 plus 2,400. 90,000. So 90,000 is the annual subscription income. How come, sir? Beta, it is, we don't need to consider that how much of the subscription is received or yet to receive. It doesn't matter to us. The income will be recorded in the period to which it relates. So that is the income of 2021. 420 into 200, the previous members. New members in this year, 18 into 200 for first half. And new members after 1st July, 18 into 100 for second half. That is going to be the subscription income. Let's move forward. The number of members whose subscription were in advance or in arrears were as follows. All these subscriptions refer to full subscription. So these are the members whose subscription were in advance or in arrears were as follows. So it has been given, and they are all referred to full subscription, means we are getting full amount from them. Full amount means $200 we are receiving from them. So how much it will become? If you multiply 8 into 200, this is going to be 1,600. This will become 11 into 200, 2,200. 15 into 200 is 3,000. 20 into 200 is 4,000. So this has been given in the question. And he has also made the clarity in the question that all these subscription refer to full subscription. Full subscription means that every member will pay $200 full for the subscription. All cafe sales are for cash and at a markup of 80%. The markup is given, that is 80%. So let's do, let me see. Annual subscription, new member admitted, and details of the number of members were as follows. Okay. They have to pay new members admitted in the second half 50% of the annual subscription. Okay. All cafe sales are for cash at a markup of 80%. Payment to supplier for the cafe was 42,000. This is the payment to supplier. Amount owed to supplier is 13,600. Inventory of cafe at the end is 13,000, 10,200. Okay. Other receipts and payments for the year: purchase of new equipment, club expenses, cafe wages, final payment to hotel for annual dinner, receipts for the hire of meeting room is also given over here. It is given in the past also, at the start also. Club depreciation is 15% using reducing balance method. Full year depreciation are supposed to be charged. So state three difference between the financial statement of a non-profit organization and those of a limited company. So non-profit organization, financials, we used to prepare income and expenditure account, where in limited company we used to prepare the income statement. Then in non-profit organization, we prepare cafe trading account. In limited company, we have to prepare one more thing, which is known as statement of changes in equity. Then in non-profit organization, we used to write accumulated fund, where in company we have equity, in which we have to write the share capital. Prepare the cafe trading account for the year ended 31st December to find the profit or loss on trading activity. So let's do it. In order to prepare the cafe trading account, we know that we need to have cafe sales, which is given in the question, inventory, and cafe purchases. Cafe purchases is not given in the question. So we need to prepare purchase ledger control account to find cafe purchases. Here we will write brought down. Here we are going to write the carried down. Payment to trade payable. Credit purchases. Let's see. Here it is. Amount owed to cafe suppliers 11,400. Then payment to cafe suppliers 42,000, and amount owed to cafe suppliers, trade payables at the end 13,600. Opening is 11,400. So let's write it down. Opening trade payable 11,400. Carried down is 13,600. Payment to trade payable is going to be 42,000. So what is the amount of credit purchases or cafe purchases, you may say? $44,200. Now we can prepare the cafe trading account easily. We will start from cafe sales, less cost of sales, opening inventory of cafe at purchases, less closing inventory of cafe. Let's see how much cafe sales are given in the question. All cafe sales are for cash at a markup of 80%. So it means, I told you earlier in the last question also, if markup or margin is given in the question, we have to find gross profit directly. If markup or margin is given in the question, we have to find gross profit directly, and then we used to go reverse. And by going reverse, we find cafe sales or any missing figure. So let's do it. Opening inventory is how much? Let me see. Inventory of cafe 9500 is the opening inventory. Closing inventory is given here 10,200. So 9,500. Purchases we have calculated 44,200. Closing inventory is 10,200. When we subtract it, we can find the cafe cost of sales. Closing inventory is 10,200. 41,300 is the cafe cost of sales, and it is given in the question that our cafe profit is going to be, or gross profit or cafe profit you may say, is 80% of the cost of sales. Markup is always given on cost of sales. So 41,300 into 80% is our cafe profit. 33,040. You will add 33,040 in 41,300. You will get the cafe sales. 74,340 is the amount of cafe sales. 43,500 is cost. He's saying 43,500 is cost. What is the problem? Yes, he's right. So let me correct it. Fareed, you have told me that the cost is 43,500. So the cost of sales is 43,500. Now markup is given, that is 43,500 into 80% of the cost of sales is your gross profit or cafe profit. So 34,800 is the cafe profit. You will add cafe profit in cost of sales to find the cafe sales. So they are 78,300. Okay, so we have calculated the cafe profit the way we have found it. Now we are supposed to prepare the subscription account. So let's prepare the subscription account, because the question has basically asked us, the examiner asked us to prepare the subscription account. So let's prepare the subscription account. So subscription account is an income account, and it is prepared as other income accounts are prepared. Here we used to write accrued brought down. Here we used to write accrued carried down. Here we write in advance brought down. Here we write in advance carried down. Here is going to be the bank figure, the amount received through bank. And here is going to be the income and expenditure account figure, which we have already calculated. That is going to be 90,000. Because 420 members were there at the start, 18 members were joined with a subscription amount of 200 per member, and 100 per member is those people who joined after 1st July, and they are 24 into 100. So 90,000. Now 8 into 200, 1,600 is the in advance brought down. I'll write over here. Then in advance carried down is 2,200. 11 into 200. Then accrued carried down is 15 into 200, 3,000, and 20 into 2,000, 4,000 is the accrued carried down. Now the difference of the two sides is going to be the bank figure. So I'll go for the total. I'll take the difference of the two sides to get the bank figure. Actually, the examiner didn't ask us to find the income and expenditure account figure because that is already, we are having that figure already. He just wanted us to prepare the complete account of subscription. $89,600 he's saying. The total is going to be 95,200, and then you subtract 4,000, 91,200. So 89,600 is the bank figure. And then you can write brought down over here because he has asked us to prepare the full complete account. And in advance, brought down is 2,200. So this is how we have completed the account of subscription. Right? So you can ask any problem if there is any. I think it was done that easily. And now we are supposed to go for the next part of the story, or the next thing which we need to prepare. Let's do that. That is income and expenditure account. Obviously, that was the most difficult one we have done on Tuesday. That was the most difficult one. There is no doubt in that. So club equipment is depreciated at an annual rate of 15% using reducing balance method, and now you have to prepare the income and expenditure account, and the marks are 6. So let's do that. Here I can prepare the income and expenditure account. First of all, you have to write the incomes. In incomes, we will write cafe profit. Then the main source of income is our subscription, as you know that. So let's see how much cafe profit we have. 34,800 and 90,000. I'll write 34,800 and 90,000. Next, another income which we are supposed to write is basically the final payment to hotel for dinner. That is what we have received, 16,200, and the previously received will also be treated as income. Deposit paid to a hotel for annual dinner, that is 4,000. 4,000 which has received earlier, that was accrued actually. Now it has been transferred to the income and expenditure account. We'll add that. This and final payment to hotel for annual dinner, 16,200 and 4,000. That will become payment for dinner. No, we are making the payment actually. Just a minute. We are not receiving the amount. Sorry. Deposit paid to a hotel for annual dinner. So we have paid the amount. Sorry. And final payment to hotel for annual dinner. So that is going to be the expense. Receipts for the hire of meeting room. Receipts for the hire of the meeting room. That is 4,600. And receipts for the hire of club meeting room in May 2021 is 2,100. Hire the outlets meeting room. Right. So that will be treated as an income. $4,600, and the other amount is going to be 2,100. We'll add that up. hire of meeting room. The 4600 plus 2100, 6700. So that is only the income we are going to have. Less expenses or expenditure. You can go for the total of income. Here I can write the payment for hotel dinner. A 131, no. Okay, 131,500. Payment for hotel dinner is 20,400. How come? Let me show you. The deposit paid to hotel dinner for annual dinner is 4,000. And final payment to a hotel for dinner is 16,200. 4,000 plus 16,200 is 20,000. So we have written that. Then we are going to write the expenses, other expenses, that is going to be club expenses, 94,400. Then we are supposed to write the depreciation on equipment. Cafe wages. Oh, we have omitted cafe wages actually. We have to subtract cafe wages from that cafe profit. That has been omitted by us because the bar basically, the cafe basically, we have to prepare the cafe trading account to find the profit or loss on its trading activity. So if you just see, all cafe sales are for cash at a markup of 80%. So we have done it right actually. That doesn't mean that we have done it wrong. We have done it right. Yes, because this is the gross profit. So we just have to subtract the cafe wages from this to find the cafe trading profit. That's it. I have just overlooked that. No problem. Cafe wages are going to be 22,000. Just subtract it. And then you can find the how much? 1 to 800. Okay, this 1 to 800 will go now to the income here, and this amount will change obviously. Yes. This one possible. Let's see. Okay. 16,200 plus 4,000 is 20,200. Yes. Total gain. What about the total of incomes? Here, 12,800 is the cafe profit because there has been given cafe wages, which I have not subtracted. That's why I have subtracted it, and the cafe profit is 12,800. 9,500. Book error 111300. Maybe he's asking something else. यही है नहीं इन तीनों को ऐड करना है जस्ट वी हैव टू ऐड 3 नंबर okay next is depreciation on equipment. So how we are going to find the depreciation on equipment? Opening asset is given. Equipment net book value 78,000. We have purchased another equipment for a price of 14,000. So 78,000 is the net book value plus 14,000, we will get 92,000, and 15% of 92,000, because closing asset is not given, that is going to be our depreciation. Yes, 13,800. So just go for the total, and then we will subtract it to find the cafe trading or cafe or surplus. 20,200 plus 94,400 plus what 13800. 128,400 and subtract. We have a deficit actually. So we are going to face the deficit of 109500 minus 128400, 18,900. So deficit is going to be 18,900. Sorry. Right? So this is how we have solved the question. This question, which is not that difficult, but again, it's a tricky one. It's a different question from the past papers, and it has come in May, June 2022, 31. We have done one thing wrong, which I corrected, that in cafe, from cafe profit, that was a gross profit with 80% markup. We have to subtract the cafe wages also. I have subtracted the cafe wages, and then I have found the cafe profit of 12,800. We have prepared PLCA and subscription account, other things we have already prepared for this question. This is not a part of this question. This is not a part of this question. So what else we have more? The club will admit life membership from 1st January. A life membership fee of 1,500 will be payable on the date of admission. Explain to a trader how the club should account to the life membership fee in the club in financial statement. So it's a deferred income. Life membership fee will be written with the accumulated fund, and then it will be transferred over the useful life of the club to the income in equal installments. The amount of the whole life subscription will be divided by the useful life of the club or by the life of the club, and that amount will be written as income in equal installments. The committee of the club is thinking of closing the cafe. Vending machine would be installed to provide snacks and drinks to the members. Advise the committee whether or not the cafe should be closed. Justify your answer. Cafe is basically giving us a good amount of profit, that is 12,800. If vending machine would be installed, we can provide snacks and drinks that may increase our income more, but we should continue with the cafe. Along with that, we can install a vending machine, and we can provide snacks and drinks other than cafe also. So if we just look at the question, we are finding a deficit. Cafe profit is 12,800, but in the income and expenditure account, we are facing a cafe profit is 12,800. We have a deficit of 18,900. Why? Because of the club expenses, and club expenses are very high. So if we can install the vending machine, maybe snacks and drinks, we can sell more, and we can transfer our deficit into surplus. But if we talk about the cafe sales, we are still getting a profit of 12,800 from that. But currently, cafe is working regarding only which facilities? Achha, nothing has been mentioned actually. Just operates a cafe. So vending machine along with cafe would be a more appropriate part. because in the future our profit may increase because of the installation of the vending machine. And it also provide better facility, better food quality, and a variety to the members. Because previously cafe is just providing maybe the only coffee or some kind of drinks. But now we have introduced snacks and drinks and snacks have been introduced. Maybe that was only for a tea kind of a thing, which was provided earlier. Okay, so that's it. Any question if you want to ask, you can. This is how we have solved this question. So this question, I will send you the recording. It is available. And that has come in May 2232. So I will send you the recording and accordingly you can do that. Okay. Now.